Now you have understood how a call option works. So we're going to take it up a notch, Plutus people, and talk about what a put option is. So think of put option simply as buying insurance. So one of my friends, Ricky, who has made an appearance on this channel already, goes to my other friend Imran and says, "Hey Imran, look at my amazing truck. I bought it for $100,000. And Imran's like, "Hey, have you thought about buying insurance on it? Because I know your driving history and I can offer you insurance for the full amount for a premium of $10,000. Ricky agrees to the idea and they do a contract for a year. So in this case, the year is the expiry of this option. Premium is the $10,000 and the strike price is $100,000. So Ricky unfortunately drives fast and just dings his truck, and the cost of repairs is $20,000. So he goes to Imran, says, "I have an insurance policy with you," and Imran has to pay up the $20,000. Ricky has poor run of luck. He gets his truck stolen. So he goes back to Imran, and then Imran has to pony up the full $100,000 because this is happening within that 1 year expiry period. So the premium in this case would also vary depending on Ricky's record. So if Ricky was a terrible driver, the premium that Imran charges to insure him is going to be higher or lower if he has a clean record. But don't count on it given Ricky's driving record and luck in this example. So that's what essentially a put option is. And as I explained, with his driving record, the put option can move up or down. And this leads nicely into our next video where I'm going to be talking about the Greeks of option trading. A lot of people don't like options because they don't understand these fundamentals, and we're gonna make them fun and easy for you, staying true to our channel. Poor Ricky's driving and his truck issues as an example. We're going to go into the real life example of a stock ticker and a put option when dealing with stocks. So here we have the ARK-K ETF. It is trading at $114.38. For simplicity's sake, I'm going to say it is trading at $114. Now you believe that the ARK-K ETF is over leveraged and it's going to crash to $110. So if you look at that put option, it last traded for 0.75 per contract. But remember, each contract controls 100 shares. So the premium that you'll pay would be $75 plus commissions. But to simplify, we'll say you paid $75 to have a promise that you can still sell your ARK-K at $114 even when the market price goes down to $110, making you a nice profit of $400 minus the commission. In simple terms, you're hoping that by expiry of April 1st, ARK-K dips below your strike price of 110. This is a put option is a bearish strategy because you are betting that the stock that you're buying the put option is going to go lower and below your strike option. So that in a nutshell is what a put option is. As always, we're going to be talking about our ticker of the week. So there were a lot of choices for ticker of the week this week. However, given we're shooting this when the ARK-X ETF has just come out, there can't be a better ticker of the week than Cathie Wood's ARK-X. I looked at the holdings and it was quite interesting to find Chinese companies like Tencent in there. And I thought that this was an ETF focused on space. A lot of my friends are very hyped and excited about this ETF. In first day of trading, it hasn't lived up to its hype, and given the downside with Tesla and ARK-K, I am sitting on the sidelines and watching it. Please give me your opinion about what you think about the ARK-X ETF. Is it going to the moon? And this is a space ETF, so that's our joke. Is it going to the moon or staying on the ground? Please let us know in comments below. Plutus people, I'm really happy to let you know that our Instagram page is live and you can find the link down below. Please DM us, reach out to us with your financial questions, and we'll be happy to answer them or do a Q&A. Ideas for ticker of the week are also really welcome. Please like, subscribe, share with your friends so that we can continue to produce quality content for you.